Hello, trading is closed on September 26, 2022. Let's start with our disclaimer, go over our calls and make some predictions. This is my trading plan for Tuesday, 27th of September, 2022. Please remember I can be completely wrong. Any trade should be made at your own risk. Look for the pattern with the early high, which is this. Tomorrow should be the pattern with the early low. We said if Friday's close was maintained at the open, we should see higher prices. Instead, we gapped down sharply at today's open, so the call was killed before the open. Here's what we said. If maintained at Monday's open, it's a bullish pattern, but that didn't happen. So no call. This is a pattern which usually rallies into the close or drops in a straight line. Neither one of those things happen. I don't think that really counts. Maybe it is, but usually if that's what you get, it's a weaker close than this. So I'm looking for a gap and a prompt move outside today's range tomorrow because we have a higher target generated from today's pattern, 3689.06, most likely by early Wednesday. I'm hoping we're going to move up and overtake today's high. If I'm wrong, the odds favor gapping down, undercutting these lows and giving me egg on my face, but I'm going to go with that. Well, the afternoon gave us an ultimate sell and a sell, but we got to the minimum target immediately. There's support under the target, and that held. We gapped down, hit lower lows. The close was over all these lows, and that's the bullish pattern, which stays bullish if it's maintained. You can call this a wall into the close. It's more convincing to me when it takes out the lows, but we had all day to take out these lows and couldn't do it. 5 minutes left to trade when it's panic time. We dropped like this, and if it is a panic sell-off, we'll gap up over this high. We won't know that until tomorrow. What about the morning pattern? We got an ultimate buy signal and a buy signal plus an optional lower target. The lower target obviously worked. The buy signal and the ultimate buy signal really hit their minimums. But when you get an ultimate, you almost always get more than the minimum. And that means almost always you're going to overtake today's high and reasonably soon. I'm not claiming it works every time, but it works often enough. We're still on a DeMark combo buy signal. These mark areas of lows. We're still trading under our lower Bollinger Band. That's not when I usually look to initiate or to hold short positions. Here's a volume spike on the E-micro contract. Now, I don't know if we spike higher tomorrow, but usually these things occur near lows. Well, I was looking for a rally today if we just hold this, so how did this change the long-term picture? Well, the long-term count's quite the same on the daily chart. Doesn't mean it's the only count, but if we correct from here, it's a successful test of the June lows. We've got our count where the fibs all work. How about this count? Well, that still works. It's the same close essentially as before. Only thing that's changed is this wave 5. Here's so I'm counting it now. I still get 5 waves down. Furthermore, you connect the lows of 1 and 3 and they're parallel to the ends of 2 and 4. It doesn't have to happen in a wave count. But when it happens, it confirms the validity of the count, and it implies we've either made the last wave down or we're making it now. So we have a volume spike, we have the DeMark signal, we have the wave count, and we have sentiment indicators are off the charts. These are sentiment indicators which are very rarely seen and mark significant lows. Tuesday's pattern has the early low. We could still gap up. There's a higher MEJT target. Unless we gap down sharply, the rules call for it to print. Today's big drop couldn't manage a close under intraday lows, and if it's maintained at tomorrow's open, this should lead to higher prices, even if we don't close higher. We've now got a volume spike in futures. It goes along with the DeMark combo buy signal. The wave count can pale a little low, and extreme sentiment indicators typical of significant lows. Unless we break through June's low convincingly, I continue to view this as a retest of that low and expect higher prices. Now, the average bear market lasts about 9 months, so if we stop here, that's just right on the average. Everything doesn't line up. We have the aphorism, Sel Rosh Hashanah B'Yom Kippur. I'll tell you, in recent years, quite the opposite has been true many times, but that's the aphorism. And Marty Zweig says, don't fight the tape, don't fight the Fed. You're fighting the tape and the Fed if you do that here, but we'll talk about that in just a minute. That being said, one can expect to find some indicators which don't line up as one would like at market extremes. I think the sentiment indicators are too lopsided to take us much lower, and if I'm wrong big time, so you need to stop. Well, what about fighting the tape and fighting the Fed? Well, I don't usually look at fundamentals all that much, but the dollar, US dollar, is really skyrocketing. It gives foreign investors a reason to put money in the stock market, the US market. And the price of oil is dropping, I believe, and that gives higher profits to companies who don't spend their money on oil. I don't follow commodities that much, but that's what I read today. So, look for the pattern with the early low, but I'm hoping we gap and take this high out, because this still looks like it has all the earmarks of a low to me, and all we need now is to follow through and get the rally. If I'm wrong big time, but that's what I'm going with. That's today's call.